Hi guys, today we talk about Lenovo Stock. Lenovo Stock is a very interesting company, and as Peter Lynch said, invest in what you know. This week I had an illumination because my computer at work broke after 6 years I was using it, and the IT guy of my company said to me that it's not possible to get new computers. It's not the fault of my organization, but Lenovo is completely overbooked. They aren't able to deliver computer because they have too much demand, which is not enough for the supply, and that is really, really difficult to give computers to new joiners. And then I thought, these Lenovo computers, when I had to buy a computer, I was looking at the price, I was looking at the technical figures, and Lenovo computers were the ones that offered the best combination. Even when I had to buy privately, I think that for corporations, this make a lot of sense because corporations don't want to invest crazy money in computers for people. And these Lenovo are working and they seem to be at a better price. So I wonder whether this could be a buying opportunity. And I thought, where could be Lenovo in 10 years? Do I see it getting worse or getting better? So I said, okay, I will start buying and then I will analyze over the weekend. I think I bought on Monday and the stock went up and up and up and up and up. And right now I could already buy a new computer with the fact how much the stock went up. So I decided to bring it to you guys to better analyze it also for me and see whether maybe it's time to book profits already. Because I bought without doing a very deep analysis, but just on intuition, or if it still has a lot of room to go. Let's not lose additional time. Don't forget to like and subscribe to the channel to make the channel grow big. Let's start. Alright guys, with the video we will go very, very in depth. And we will start with a quick presentation of the company. The company is the leading manufacturer of PCs in the world, but has also additional businesses, has 77,000 employees across the world, has factories in multiple countries, is a real giant. And this is like their presentation of the business. Let's start with their presentation.
At Lenovo, we solve problems, really big problems, and we've been doing it for over 30 years. Our customers' challenges are bigger than ever, so we go big too. No, make that huge with the industry's leading portfolio of end-to-end client, edge, cloud, network, and intelligence solutions and services. This is the new IT. So what does that mean? It means our digital workplace solutions take the complexity out of making hybrid work. Nice job. Our edge to cloud and AI solutions help businesses of all sizes unlock the power of data in real time, which in turn unlocks lots and lots.
Okay, guys, this is critical because it's showing that they are positioning themselves not only as a computer provider, but also as an artificial intelligence player with this cloud data, help make more effective things. This is critical for the perception of Wall Street on how they want to be positioned. They want to be positioned as an artificial intelligence player.
Of happy customers. And Lenovo's industrial metaverse and AR/VR solutions are opening up opportunities across industry, from aerospace to education, transforming the way workers collaborate and students learn. A+. And all our pocket-to-cloud solutions are available through a predictable, scalable, pay-as-you-go consumption model. So your IT can instantly adapt to the ever-changing demands of your business.
So this is another critical point that they are trying to develop on the metaverse, for example. And this is why probably Wall Street is so reluctant on Facebook Meta, and they crash when they heard about metaverse, because like such a giant as Lenovo, is gonna sell a lot. It's gonna deliver good quality at low price. So probably when Wall Street sees such things, they get worried.
With a workforce of over 80,000 in 180 markets, 18 R&D locations worldwide, and 35 plus manufacturing facilities, we're there where you need us. And our global supply chain is ranked in the top 10 in the world, so we can meet customer demands anytime, anywhere. But we know none of this matters if we don't make the world a better place. So we offer customers a full suite of sustainability technology and solutions, from asset recovery and carbon offsets to our unique Neptune water-cooled servers. And we are fully committed to becoming net zero by 2050. And we believe it's only smarter technology if everyone can use it. That's why our Product Diversity Office embeds accessibility in our products, empowering us all to build a smarter world.
Alright, guys, so Lenovo really a giant, and they have three businesses where they count on. The Intelligent Devices Group, it's the business that is making computer, laptops, telephones, like more on hardware. They have this more AI business, the Infrastructure Solutions Group, to make smarter operations online, edge and cloud computing, analytics, artificial intelligence. These are like the very popular words on Wall Street recently. And then they got this solution and services business where they try to bring intelligent solutions to companies. And I believe this could have a good way because, as these are cheaper, corporations like cheaper, being that a giant, they can provide at a global scale. So I think their businesses will really still have power. And you see, they have over 20,000 technicians across 108 markets that help customers transform their businesses. So I believe this is really a business that could continue. All right, let's go through their presentation, right? So guys, before we continue, the video is sponsored by my Patreon channel, Insiders Buy Stocks. With just $5 a month, you have access to all my portfolio, what I'm buying and selling. Not bad for that price. A link in the description of the video. If we go to the last financial report, we can see the results of the three divisions of Lenovo. So this is the computer division, and it was in crisis this year because it declined 22 to 28% year on year. And the reason is excess PC inventory after COVID. So they sold a lot during COVID, they made a lot of inventory, and then the demand dropped. But they see that the revenue increased 12% quarter on quarter, surpassing the historical average of 8%. They remain the global PC leader in the first fiscal year, and they are securing their sector leadership by expanding market share against largest competitors. So they still maintain the role of leading PC corporation. Anyway, their profit declined 28% year on year. And this sense of the long-term growth strategy revolves around investing in innovations and developing strong products and new solutions to drive success in both PC and non-PC categories. So they are developing this artificial intelligent PC that will enable personalized experiences, and the adoption of artificial intelligence computer will optimize the workforce experience and boost productivity in multiple years. So they were 20%, non-PC sales were 20% of the segment. Smartphones were recovering, and they have a favorable shift. And the smartphone business is expected to continue its growth trajectory with ongoing product innovation, which makes sense. So like the computer business had a bit of crisis, but is getting better. Then we got this AI sector, where we also had a decline, 17% year on year. But they are showing sign of demand stabilizing in the second quarter. And the market headwinds in the near term have had minimal impact on long-term commitment to keep product strategy of building a comprehensive infrastructure solutions portfolio. which is enhanced by artificial intelligence. So the high development costs associated with new projects in this area, coupled with the high base effect of last year peak performance, weighed on the bottom line, and they register the loss in artificial intelligence, so they are basically investing a lot, but they see artificial intelligence as the main catalyst for the future growth. So their technologies have a 32% less power consumption, so they plan to help businesses towards efficiencies, and with generative AI, they also work to have these metaverse simulations and cognitive decisions at scale. The goal, guys, of artificial intelligence is to terminate all of us in the company. So during the period under review, among non-server products, they deliver all-time high revenues in service and storage business across multiple customer solutions. According to the latest quarterly third-party statistics, the Lenovo market share by revenue in the storage market advanced to the third place globally. And this is crazy because, like, we talk about the third company in the world, but no one is even thinking about that, when talking about artificial intelligence and so on. Solutions and Services Group, this is growing very well, like they are selling extra services with their computers. They grew 14% year on year, and they grew 41% the year before. So their support, they are doing also helping on cybersecurity, all these kind of extra products. They are growing very well. So America is declining 17% year on year. Asia Pacific continue to grow, even if of the depreciation. So they are going very well. The Europe, Middle East, Africa, like our area, show the biggest improvement among all regions. In China, they are losing, attribute to lower demand for both PC and infrastructure business. Okay, because China is also in stagflation. If you go to Outlook, the most important thing, the group wants to grow to accelerate its transformation and gain in market. The continued investment in innovation has been instrumental to building diversified growth strategies and unleashing new growth opportunities in intelligent transformation. The group committed to a total investment of 1 billion over the next 3 years to expand its AI capabilities. So yeah, all these AI, edge, cloud, high performance computing, we have all of that. So big race for that. We don't know who will win. The group business is stabilizing and well positioned for a year-on-year recovery. The total market of the global PC sector is regressing to pre-COVID levels, but could remain at a higher level than pre-pandemic period in the long term. This is important. Lenovo is well poised to lead the global race in device innovation by enhancing features for gaming, entertainment, and ESG designs. So they are focusing on games. They want to expand in non-PC areas like accessories, solutions. And yeah, they will expand service in the area of hybrid cloud, sustainability solutions. So like this is like a company that wants to be the leader in IT, intelligent transformation, help customers on AI, improving the business segment. And I believe they are well positioned because they are the leader computer company. The fact that they are big will not make them grow too much. On the other hand, they have an advantage because they can try to push these AI services to all their clients, which will likely not move away from them because Lenovo has likely the better price, which is a bit critical. Now, let's have a look a little better at the financial situation of Lenovo to see whether financially is a good company or is a bad company. First of all, my analyzer because I need to be objective. I need to have a tool which is objective in analyzing whether a company is good financially or not without bias. So that's why we have this tool. Let me go back. Net margin is not good, 1.6%. This is low. PEG ratio 182 is not ideal because the growth was lackluster, but the price to earning is very good. The price to sales is extremely good. So I would say that this is good, that we are paying quite cheap for the company. In general, the growth from analyst is good. Sales is not the best, but it's still growing in the last 5 years. But this is a big company, so don't expect more than this. In spite of artificial intelligence, don't really expect more than this because it's a very mature business. It will grow with inflation and GDP, AI, non-AI. But I think this will be sustainable also in the future. Quick ratio, not so good, 0.6. Debt to total capital, quite healthy because it's at 30% for such a mature business is good. We know that the return was getting worse in the last years. We saw it already in the presentation. We saw that the sales in the last year weren't very good. Given that we still have a very good interest coverage ratio because the EBIT is a lot bigger than the interest, and yeah, the EPS surprise was good in the last year. Sorry, I checked separately, it's not here. So we need to give also credit for this. So, the score of the company is not very good in the short term. Let's give 2 points because in reality they beat it quite well, the earnings. So we got a 3.5 score, which is very, very low. Not the best, generally wouldn't look, but we believe that this is a temporary situation because they had a boom in COVID. They have good opportunities for artificial intelligence. So guys, the final moment is the valuation. We want to see how much the stock is worth, and I really had struggles to calculate, but finally I was able to arrive to the right amount. The difficulty is that for Hong Kong dollar stocks, you need to consider the Hong Kong market cap and not the US one. And that was my difficulty. So the company giving a compounded growth of revenues and DPS of 5 years in the last 7 years. A fundamental growth here is given 1%, but I'm giving 4% to Lenovo. I think they can deliver this 4% growth. And given 1% buyback done in the last 7 years and the 4% dividend yield with a cost of capital of 11%. The stock should deserve a terminal multiple of around 15. Seems that the price to earning is 21, so seems a bit high. And the value of the stock is around 20% undervalued. You see these values, but these are the conversion of the USD value of the Hong Kong dollar stock. Is at the moment around 120, 115, 110, 20 Hong Kong dollars. Could be worth around 20% more. So if you look the graph, sorry, that's Çalhanoğlu. If you look the graph, we see that the stock is a compounder because it was 6. It's growing quite a while. I think, yeah, it would be good maybe around 27, 28, which would be close to the historical maximum. When the stock gets to similar level, I think that's a good time to book profit for the stock, because then will be fairly valued. Let me know in the comments what you think about Lenovo, and I wish you one